What if the most disruptive blockchain in 2025 isn't Ethereum? What if it's not Bitcoin? And what if the real infrastructure play, the one being adopted quietly by institutions, is Solana? That's not a meme. That's not hype. That's what's unfolding right now. Let's zoom out. In 2025, the global economy is shifting again. The Federal Reserve has paused rate hikes. Inflation is stabilizing across developed markets. Liquidity is cautiously returning to risk assets. Bitcoin and Ethereum ETFs are live across the US and Europe. But institutions are no longer just buying exposure. They're building the next layer. And that next layer is infrastructure. The digital plumbing behind tokenized capital markets. Blockchains that settle real-world assets at scale. And Solana, the chain many retail investors gave up on, is now positioning itself at the center of that transition. Let's break down why. For years, Solana was ridiculed. Outages, NFT congestion, centralization concerns. It was fast but fragile, flashy but unstable. Yet something changed. Silently, relentlessly, Solana evolved. Its core tech matured. Its validator set expanded. Its ecosystem rebuilt from the ground up. And its institutional relationships deepened. This isn't the same chain that crashed in 2022. This is the version that survived. The version that learned. The version that now moves with purpose. Because in 2025, Solana is no longer just a layer one. It's becoming a global execution layer for tokenized finance. Let's start with the core value prop. Solana was built for performance. Block times under 500 milliseconds. Transaction fees under a penny. A single shard architecture, meaning no rollups, no bridges, no fragmentation. In a world of complexity, Solana offers simplicity. And that's exactly what institutions need. You cannot tokenize trillions in bonds, real estate, and treasuries on a chain that slows under load. You need speed. You need consistency. You need scale. Solana delivers all three. And now the smart money is paying attention. In early 2025, the Solana Foundation announced a landmark collaboration with R3, the enterprise firm behind Corda. Corda is used by over 400 financial institutions worldwide, including HSBC, Bank of America, Euroclear, and the Monetary Authority of Singapore. It powers some of the world's largest digital bond pilots. Now, through this partnership, Solana will serve as Corda's public settlement layer. That means private, regulated financial activity on Corda can now finalize directly on Solana's mainnet at speed and at scale. This is not vaporware. This is live architecture for bridging permissioned finance with decentralized infrastructure. And to solidify this partnership, Solana Foundation President Lily Liu joined R3's board of directors. The message is clear. Solana isn't trying to replace banks. It's offering them the tools to upgrade. But that's just the beginning. In May 2025, the Rex Osprey Solana Staking Fund launched on the CBOE. This product gives traditional investors exposure to Solana staking yields through a regulated, exchange-traded structure, targeting 7% returns, delegated to verified validators, and fully compliant with institutional custody and accounting standards. Macro hedge funds are already allocating, because this is the missing piece. Not just buying SOL, but integrating Solana into actual investment portfolios. That's what real adoption looks like. And there's more. Visa is now settling stablecoin payments directly on Solana. Stripe is testing payout rails using Solana's SPL token standard. Circle has prioritized Solana as one of its fastest and cheapest networks for USDC. And Helium, the decentralized telecom protocol with deployments in over 70 countries, completed its full migration to Solana. They didn't choose Ethereum, they chose Solana. Why? Because Solana doesn't chase every trend. It doesn't pivot with the wind. It builds execution. Its goal is clear: be the fastest, most reliable general-purpose blockchain in the world. And that discipline is starting to pay off. But Solana isn't perfect. It still carries baggage. The network outages in 2022 and 2023 left a scar. Even though Solana hasn't gone down in over a year, that history lingers. Critics still point to validator centralization, to insider token allocations, to governance that's driven by a handful of core teams. And those are valid concerns. But let's be honest, every blockchain has trade-offs. What Solana offers is something few others do: relentless focus. Throughput, latency, reliability. That's its mission. And now the ecosystem is starting to reflect that. Solana is in the top 3 chains for monthly GitHub commits and active developers. Over 0 developers are building on Solana. From decentralized exchanges, to real-world asset platforms, to consumer wallets, gaming engines, and identity protocols. And here's the inflection point. In 2025, Solana surpassed Ethereum in daily active users for the first time. Not bots, not wash trades, real wallets, real apps, real volume, and many of those wallets belong to institutional counterparties. Because institutions aren't just watching anymore. They're building. They're testing custody solutions. They're exploring settlement rails. They're moving identity and compliance infrastructure on-chain. And Solana is becoming their substrate. So what does that mean for investors? It means Solana is no longer a bet on hype. It's a bet on throughput, on composability, on real-world adoption. It's a bet on crypto's evolution from speculation to infrastructure. And Solana, despite its past, is now one of the few chains capable of serving both institutional and retail markets without compromising performance. Still not convinced? There's one more upgrade on the horizon. It's called ACE, Application Controlled Execution. This gives developers granular control over how their smart contracts interact with the base layer. Think of it as programmable gas optimization, customizable execution logic, and user experience upgrades all baked into the protocol. That opens doors to new applications. Finance, gaming, DePIN, supply chains, identity, everything tokenized, everything composable, and everything fast, because speed still matters. In a world of real-time payments, tokenized assets, and automated finance, throughput is not a luxury. It's a requirement. And Solana is built for that requirement. So let's step back. Most people still see Solana as a meme coin playground, a retail casino. They don't see the deeper shift. They don't see what Visa is doing. They don't see the hedge funds launching staking products. They don't see the telecom networks migrating. But when Wall Street updates their reports, when the next ETF goes live, when the first cross-border bank uses Solana for payment rails, it may already be too late. because the asymmetric window doesn't stay open forever. That's why early positioning matters. Not just emotionally, but strategically. If you care about infrastructure that survives regulation, if you care about networks that attract real adoption, if you care about the future of programmable finance, you need to be watching Solana. This is not a clone, not an experiment, not a sidechain. It's infrastructure, it's execution, and in a fragmented world, that unity could be priceless. So what's the takeaway? Solana in 2025 is no longer just fast. It's credible, it's integrated, it's accelerating, and it might just be the settlement layer for the next generation of global finance. Stay sharp, stay strategic, and keep wayfaring.